Hello traders, hello everyone, my name is Gregor Horvat and welcome to our new episode of Surfing the Elliott Waves, where I will look some of the most interesting developments for this week. This video has been brought to you by Orbex. I will cover Euro Pound, Cable, S&P 500, Aussie and also a quick look at the dollar yen. Now firstly, if we take a look on the Euro Pound, we have seen a very nice and interesting reversal from the 61.8% of this March drop, and if you look closely, this could be even labeled as a corrective ABC recovery. What is the most exciting is that we have seen a very strong drop in the last week, clearly with 5 waves back to this lower trendline support. So this trend line for now holds, but because of a very aggressive bearish Elliott wave structure, we can anticipate a break of this trend line. At the same time, this broken trend line could also result to a bearish head and shoulders pattern. So it's a head and shoulders stop, meaning that when a neckline is broken at the same spot where this trend line is located, it could call bears to much lower prices. Now looking at the 1 hour chart, of course, there is always a chance that higher resistance levels will be retested. The ideal resistance would still be a spike or a slightly small push above this former wave 4 here at 90.80 level, and then you have resistance even up to 9100 levels. So from that zone I would expect a resumption to the downside, but of course we have to consider that if bears are very strong, which clearly has been the case, because you have 5 waves down in a very sharp manner, that's why we also have to consider that maybe this whole corrective recovery from this July lows might already be finished. So sooner or later I'm expecting more weakness. Now looking on the other hand on cable, just to give you the whole perspective about regarding pound. So in the near future I'm also expecting pound to see more upside against the US dollar, okay, because we have here also 5 waves up and now it looks like we are in a wave B. So watch out for, if we see more weakness, watch out for this 1.24 area as a potential support for our recovery. So when this third leg will resume on cable, that's when actually Euro Pound could really see hard drop. Now let's take a look also on stocks. Now the S&P 500 is making some very interesting turn today after this very sharp recovery on Monday. And Monday flows, as you know, sometimes can be very tricky, but whenever you see very sharp Monday flows, okay, these flows are not, I don't trust them so much, okay. Normally they will get completely reversed in the next few days, like Tuesday or Wednesday already. So in my opinion, there's a chance that stocks will see more weakness, even retracing back to this open Sunday gap. And considering that we also have 5 waves up, this definitely makes quite aggressive bearish call, at least for the short term, towards back for a drop towards this 3120 level. To give you the full outlook on the S&P 500, now this 5 waves up for a wave C can represent actually wave B here of this corrective structure that I think can be underway already since start of June. So now we are trapped in this range for 1 month, but still wave C is missing. So I would not be surprised if we just remain trapped in very tricky consolidations through the next few weeks as well, or maybe even through whole summer. But of course there's always a chance that wave B will be irregular formation, meaning that even if we rally above 31.35, still this can be just a temporary recovery, and that sooner or later resistance, I believe, will be found and market will see weakness. Now if we see aggressive drop already from current levels here on stocks, then I think that commodity currencies could fall against the US dollar. Here I'm looking at the Aussie. Now Aussie is definitely here in a corrective setback, I believe incomplete, because we have this sharp drop and now you have quite slow recovery, and so far only in 3 waves, okay. So in my opinion we could see more weakness. We already see this broken trend line, okay, and in fact this cannot be counted in 5 waves, this current recovery here from 68.30, meaning that this is probably part of this corrective advance. So I'm expecting more weakness here, and if stocks would come to the downside, definitely this would support the idea for the bearish case. Also, looking at copper, I think it's very important here. You have possibly 5 waves up, so if this market is going to break this trendline support, I think that Aussie dollar will be much lower. Now finally, let's take a look on dollar yen. Now dollar yen is currently making some very interesting developments, at least on the intraday chart. Notice that this can be counted as a 5 waves up here from June 23rd close, followed by only a 3-wave drop towards this level. So this looks like a corrective formation, and despite lower stocks, we see dollar yen trying to rise, meaning the traders will have more interest in risk off mode, will have more interest in the US dollar rather than Japanese yen. So again, Aussie dollar could be a better play or better mover to the downside in risk of situation compared to Aussie yen, for example. Okay, so this pair is very important to know which dollar or yen pairs could be the best movers, either in risk off or risk on situations. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video. Talk to you soon. Bye.